Hi everyone. So I've been watching the way things are going with the Lego sets that are retiring at the end of this year. Just looking at the class of retiring sets as a whole and comparing it to the previous years. And based on some of the things that have been happening recently, I'm beginning to see some trends this year that are leading me to think that this class of sets retiring here at the end of 2024 could be especially good as investments when you compare it to the last few years. So, in this video today, I'm going to lay out what I've been noticing and why I think 2024 is going to be a really great year for Lego investing. Here we go. So before I start, I thought I'd give a quick channel update. My last video I asked if you all wanted to see more Lego investing content. The answer was clearly a resounding yes. Sincerely, thank you to everyone who watched and liked and subscribed and commented on that video. And ask and you shall receive. So lots more Lego investing content is coming. I'm still going to be doing the lightning review videos for the other kind of toys like I was doing before, but I'm going to be supplementing that with these kinds of videos as well. So stay tuned. And then, of course, the quick disclaimer, I'm not a financial advisor. This is not financial advice. All investing, including Lego investing, comes with some risk. Past performance is not a guarantee of future results. And also, I'm wrong sometimes. I'm human. So make sure to assess your own financial situation and risk tolerance before you partake in any investing activities. Good? All right. On to the topic at hand. Is 2024 going to be a good year for Lego investing? Yes, I think it is. I'm going to tell you why. So first, I need to go over what has been happening the last few years. It's no secret that the number of people investing in Lego has grown a lot in recent times, and the supply of retired sets on the aftermarket has increased because of that. Some of the people who've done it for a long time will refer to the before times when you could just get any old set at MSRP and still do pretty well. It's not like that anymore. So we're going into 2020, and there's already this trend of more and more people getting into Lego investing, and then the pandemic hits. Suddenly, people have more free time. They're spending more time at home. They're not spending money on travel or going to movies or concerts and things like that. And Lego was the perfect hobby to fill that void. So the people who were already fans were buying more sets than they used to. And a lot of people who maybe liked Lego as kids rediscovered the hobby and started buying sets as well. And around the same time, Lego starts marketing sets specifically to adults. I believe it was in 2020 that we started seeing sets with the 18 plus in the box and the adults welcome in marketing materials. And to be clear, there's always been loads of adult Lego fans. The architecture theme, the modular buildings, they've been around for almost 20 years and they were always primarily for adults. But I think the 18 plus boxes probably opened the door for some adults who may have been reluctant before that and they suddenly felt more comfortable having Lego as a hobby. Also, during the pandemic, we saw a big increase in interest around Lego related content on sites like YouTube and other places. People were home. They were spending more time on the internet. Really, all internet content saw a big boost, and Lego content was part of that. And when you discover what some of the mock builders on YouTube can do with these little bricks, it's incredible. And so people got interested in Lego. So with all this going on, the demand for Lego sets explodes. There's all these new people buying sets, and adults in particular. And I think a lot of adults not only realized how great Lego is as a hobby, but also started to realize that, wow, these sets can go up in value a lot. And so that trend of people coming into Lego investing that was happening before the pandemic grew exponentially. So now we get into 2021, 2022. There's all this extra supply on the secondary market. And on top of that, there were supply chain issues that caused zombie stock, and we were seeing crazy inflation after the pandemic, and Lego raised prices on a bunch of sets. So because of those things, 2021, 2022 were not great years for Lego investing. I mean, don't get me wrong, there were some big winners from those years. There's always some big winners, but there were fewer big winners. And the kinds of returns people had gotten used to seeing across the board from Lego investing were just not there in the same way that they had been. And in those years, if you were an investor who went into this with the mentality of the before times that any set at MSRP was going to be a winner, I mean, if you didn't have a clear strategy, if you weren't looking for discounts, if you weren't doing some research, you probably didn't do well investing in Lego. I think a lot of people who jumped in during that time didn't realize some of the drawbacks. I mean, Lego investing is not a turnkey business. It is a bona fide side hustle. It takes a lot of storage space. It takes a lot of time and discipline. Shipping and fees are a very big deal, and they cut into the bottom line in a way some of the new investors may not have realized. And I think because of that, after 2022, a lot of investors just dropped out. Wasn't working for them, so they quit. And last year is when we started to see some evidence of that. 2023, last year, I call it the year of the zombie stock. We saw some banger deals last year. It seemed like by the end of the year in 2023, everything was going for 40% off, sometimes more. And I think what happened is Lego had increased their production. They were selling so many sets, and a lot of those sets were being bought up by investors. And suddenly there weren't as many investors, and there was all this leftover stock. What I think happened is the retailers realized at the end of the year they had to move a bunch of sets, and so they dropped prices drastically, which is why we saw so many good deals. But even with those good deals, there was still a ton of lingering inventory, the zombie stock. I got to give a shout out to Brick Domain YouTube channel for doing the research on this one. He looked into it. He put out a video a few months ago, I think it was in July, and he found at that time it was over 60% of the sets that retired at the end of 2023 were still available at one or more major retailers. So that was 7 months after they retired. I fell victim to this too. This right here is one of the most hype sets from last year, the Medieval Blacksmith. And it is still available from Amazon at MSRP 1 year after we retired. Fortunately, I got this at a good discount. And I still think it's going to do well, but I know I'm going to have to hold it a long time. It's basically had an extra year of shelf life at this point. And there were so many other sets that retired last year that had the same issues. The Star Wars dioramas, Luke Skywalker's helmet, Indoor Heroes Brickheads, the Speed Champions, Aston Martin set. These were all sets that were like the darlings of the Lego investing community last year until they lingered in stock for months and months and months after retirement. And when that happens to a set you've invested in before you can sell that set, first you have to wait for that stock to dry up at those retailers. Then you have to wait for all the resellers who've been holding it for months, and they're just trying to make room and clear space and get rid of it quickly. And so they sell it for low. So you have to wait for that stock to sell through as well before you can see a decent return. If you were an investor who missed out on those end of the year deals, you probably didn't do that well last year either. Zombie stock sucks for investors. But here's the thing. Retailers don't like zombie stock either. They know there are all these new sets coming out on January 1st, and new sets sell faster because people don't have them yet, and you don't have to put new sets on a discount. So the retailers can sell the new sets faster and get a higher margin on those sets. If you're Target, if you're Walmart, you want to get rid of those old sets off the shelves as quickly as possible and make room for the new ones. You don't want lingering stock. Even if you're an online retailer like Amazon, even the big warehouses, they have storage limits. So now that brings us to today, 2024. And I think because of what happened last year, retailers ordered fewer of the retiring sets this year, and Lego produced less of the retiring sets this year. And I think they may have overcorrected, because so far, at least, we are not seeing the kinds of deals we saw last year. Amazon already started their Black Friday deals, and so far, they have not been good. I looked through them today. I think the only one I even thought about a little bit was this Green Hill Zone set, which I still think could do well, but the demand is a little low. So I decided not to take the risk on this one. It's if I'm wrong, I'm wrong. But anyway, we're not seeing good deals. And we are also seeing a lot of sets sell out early. There's always a few sets that sell out early, but we're not even at Black Friday yet. And look at all these sets that are already gone. And every one of these sets that sold out early is already doing great on the secondary market. So, what does this mean? I think we could see a lot less supply of the sets retiring this year after they retire. And because of that, I think we could see some really good growth from the sets retiring this year. This weekend coming up is Insiders Weekend, and I'm going to be watching. And if after this weekend and next weekend the deals don't get better and we continue seeing more sets selling out early, I think I'm going to have to revise my strategy a little. Usually, unless I'm really high on a set, I look for at least a 30% discount. But if these trends continue, I may be willing to settle for a little less than that. Maybe 20% for good sets. So that's what I've been thinking about. Okay, so that's it for today. If you like this video, please like and subscribe below. Thank you for watching.